Ladies and gentlemen, Panda Trader here. Today I'm gonna show you how gold is moving. Okay, let's dive into it. First, I want to show you the Core PCE right here. That's the main inflation report out of the United States today, and that's the piece of news that will affect gold in the next few days. Second, I'll walk you through my analysis for gold, the same way I always do it. First, we find the main bias of the day by jumping into the daily chart and making the daily high and the daily low. After that, we jump into the 4-hour and 1-hour charts to find liquidity, the zones where funds and banks put their limit orders. Finally, we look for confirmation signal before taking a trade. Okay, let's get into it. Before we jump into the detailed charts, let's quickly recap where gold has been lately. If you've been watching this pair for a while, you know it's been a while, right? Gold pushed on the way up to a huge high earlier this year, then it turned around and has been sliding lower ever since, week after week. Over the past few weeks, price has been jumping around big range between the 4,000 to the little but above the $4,100. That's the zone where we've been fighting in. Today, price is sitting right around the $4,045, so we are on the lower side of that range. Keep that picture in your head because it matters for everything we are about to look at. Now let's talk about the news, because today is a busy day on the calendar. The big one for gold is the Core PCE Index out of the United States, and that's the Federal Reserve's favorite inflation gauge. It came in at 0.2%, a little cooler than the 0.3% that was expected. Cooler inflation is usually friendly for gold because it keeps the door open for lower rates interest down the road. We also got the advanced GDP number that landed right in line with expectations at 2.1%, and unemployment claims came in higher than expected. On top of that, the Bank of England is releasing the monetary policy report this evening, along with the official bank rate decision, and the governor is speaking right after that. So we've got both United States and United Kingdom event risk stacked into today's session, and that combination can easily create some sharp moves in gold. Let's zoom out to the weekly chart for a second, just to get a big picture. This pair had an enormous run-up earlier this year, and since that peak, it's been in a steady slide, week after week. Last week continued the same story, gold closed lower again, and right now, price is sitting around the $4,045. For this week, I want to see whether buyers can finally step in and hold this area, or whether we just keep grinding lower. I'm not digging deeper into the weekly chart today, it's just here to remind us of the bigger trend we are trading inside of. Now let's dig deep into the 4-hour chart because this is where things get interesting. Over the past month, gold has been making a series of lower highs. We top out near the $4,200 into a run over to a lower high near the $4,145 right here, and then another lower high after that. That's the classic side of sellers staying in control in this time frame. But here's the twist, over the last couple of candles right here, gold has broken sharply higher, pushing straight up into that recent lower high. That's a real crack of structure on the 4-hour chart. And it tells me that buyers just showed up with some real strength. So right now, the 4-hour picture is shifting. We might be seeing the start of a change of character where the short-term trend flips from down to up like this. I'm not fully convinced yet because we are still in the bigger downtrend picture on the daily and the weekly chart, but this 4-hour break is something we need to respect. And it lines up with what we are about to see on the 1-hour chart. Let's zoom into the 1-hour chart right now because this is where I do most of my work. Going back a couple of weeks, gold pushed down in a clean 5-way system right here, mark 1 through 5 here, then it corrected in an ABC pattern. After that correction finished, we got a change of character next to it. That's the moment where short-term downtrend broke and buyers took over. From there, price built a consolidation, trading between roughly $4,000 and $4,060 for a couple of days. That's the classic accumulation, funds building position quietly. Then gold broke out of that accumulation box with a strong bullish candle, spiking up toward the $4,110. After that spike, price pulled back into what I'm calling a reaction zone right here, roughly between $4,045 and $4,085. Below all of this, there's a liquidity pool right here. sitting between $3,960 and $4,000. That's rating sell side liquidity. That's the spot where a lot of stop losses are properly sitting. Overhead, the next real resistance is up near the $4,160, right where all the high lines up with a failing trend line. So where's the sell opportunity today? I'm watching that $4,080 right here. That's the edge of the reaction zone, and it also lines up with the failing trend from the 4-hour chart. If price rally into that area and shows rejection, a bearish pin bar, or a clear range of character on a lower time frame, that's a spot I consider a short, targeting back down toward the $4,045 and possibly the $4,000 area below that. The bigger resistance, if price get that far, is up near the $4,166. That's the trend line and the prior high meeting together. That's a much stronger sell zone if we ever target. Now for the buy side, my first support is that reaction zone itself, around the $4,043, right where price is trading today. If that holds and we see some bullish confirmation like this, that's a short-term long, targeting back of the $4,084. And the deeper support is that the liquidity pool between the $3,960 and $4,000. If price dips into that zone and we get a clear change of character back to the upside, that's actually a higher probability long, because that's exactly where the stop losses and liquidity are sitting. So here's the plan for tomorrow, the 31st July. The main scenario, gold holds about that $4,000 area, and the 1-hour change of character stays intact, and we cry back of the $4,084 right here, and eventually toward $4,166. The reverse scenario, if gold breaks down through the $4,000 and sweeps that liquidity pool over here, downward toward the $3,960, I'll be watching closely for signs of reversal back up from there, because that would just be the market grabbing liquidity before the next move higher. Keep in mind that the Bank England rate decision and the government speech are both coming later today, and events like this can move gold fast in either direction. If a fresh headline hits, it can easily invalidate either one of these scenarios in a matter of minutes, so stay flexible. And just a quick reminder, this is not financial advice, it's just how I'm reading the chart today. Always manage your risk, only trade what you can afford to lose, and use a proper stop loss on every single position you take. Alright guys, that's the full plan for gold today. If this breakdown helps you see the market a little clearer, do me a favor and drop a like. It really helps this channel grow. And if you want daily gold analysis on the 1-hour chart like this one, hit that subscribe button and turn on notifications so you never miss a move. Trade safe, manage your risk, and I'll catch you in the next video. Panda Trader signing off.